With us now for more is Helen Go-Oleta, Chief Strategist at RCBC Trust Corp and President of the Fund Managers Association of the Philippines. So good to see you, Helen. Welcome to the program.
Good morning, Kathy.
Okay, so how have your strategic and tactical considerations evolved given the prevailing risk events there, the tariff uncertainties, monetary policy outlook, and corporate earnings, the recent ones?
Actually, for us in RCBC, we're majority a peso house. So majority of our clients are focused more on the fixed income. They want the accrual coming into play as we invest in all these assets. So for us, we just do a shift of ±5 to max of maybe 7-8% in terms of movement. But majority still is on the fixed income assets. If we all know that the interest rate as of this time is expected to be reduced in the upcoming August 28 monetary board meeting, and also on the Fed September 17-18 meeting. So I guess you can see a lot of action in the fixed income before the announcement of the RTB. If you look at the RTB at 6%, it's very much a good entry point for most of the investors. That's why we see the size being capped by the Bureau of Treasury to make sure that everyone is served from online to the proprietary to the trust group or the retail side of the business. So everyone's excited to see good momentum on the interest rate. So without this RTB, I think the market's ready trading as of this time 20 basis points lower than the current RTB offer.
Talk to us about the RTB offer because that's really been gangbusters. A lot really interested, in fact, oversubscribed earlier than forecast. What's driving the demand? Apart from interest rates, of course, are there other overarching reasons why people are going to fixed income?
I think for one, if you look at the corporate bond issuances, the spreads on the corporate bonds versus the may not commensurate, maybe because there's so much liquidity in the market. That's why people would rather go to the sovereign issuance, and that's the retail treasury bond, number one. Number two, it caters to retail. So even as low as 5,000 pesos, you can participate. Unlike when you trade in the corporate bond market, there's a higher minimum, I guess. So that's another aspect. Number three, everyone knows that with the benign inflation, and hopefully it will just be below the range of a 2 to 2.5 maybe max, going to the next 2-3 years, then definitely it would be a good investment opportunity. That's why a lot of people are jumping in. Number one, aside from the fact that we had a huge jumbo maturity last August, and also upcoming this September, there's also another maturity which is around less than 300 billion. So those two maturities really need to be the appetite needs to be captured in this market. So that's why you see a lot of people going into the retail treasury bonds. So the mindset of having a fixed.
Did CIMEPA play a role? I mean, a lot of people think this is just stock transaction taxes coming off, but CIMEPA really stands for capital markets. Did it drive funds into fixed income rather than stocks, even as stock transactions have come off 20% there?
Actually, if you look at the CIMEPA, the main, as you mentioned the sales transaction tax plays a very important role. Why? Because the possibility of you churning with our tight range of around 6.2 to 6.5 range, churning is very, very crucial for us to generate more returns, compared to peers. So if you look at the reduction of the CIMEPA, which is around 50% on a churn basis, there is value to it. That's why in terms of trading the market, while we don't see any, while we're waiting for the break of the 6,500, we can churn. So that is a good thing. And if you look at CIMEPA removing the 5-year and beyond tax exemption, actually, if you look at that, all the holders existing still enjoy it until the rest of the remaining of the 5 years that they had. But the new ones can now go to the bond issuances of the bank. So I guess on the part of the bank, you can see that there's additional cost for them to put a premium over the current GS or the government or sovereign borrowing. So I guess that also channels in the market into the bond market. So yesterday we've seen around 60 billion churn in terms of which is healthy for us. So we want to see more of that. And so there are a lot of efforts from the central bank to the Securities and Exchange Commission to the PSE, into also in the Insurance Commission, pushing in to develop our capital market. So everyone's playing their role, also SMAP. So hopefully, one by one, we can move towards what our peers, neighboring peers, are already into. So we can do a lot of catch up, actually.
Did you just say 6,500? We got about a minute. What sort of a timeline are you looking at in the PSEI then?
If you see more, I mean, we've heard PSP Governor Madonna saying that there's 2 possible cuts and possible open for another one. So I guess this sudden, these expectations of a more rate cut would push the market. But actually, Kathy, if you look at it now, we're 6.3, that's just 200 points away, but it seems so near and yet so far, right? So I guess it's more of us seeing with your investment now 50 basis points lower, where do you want to go this time?
Right. It's been bouncing around, very tight range. That's why I asked. But thank you for the insights. Really appreciate it. Helen Go-Oleta of RCBC Trust Corp.